Happy Friday, everybody. Anthony Special here with Special Analysis. Hope you had a wonderful week and you're getting geared up for the weekend. Today I'm going to keep it short and sweet. I want to just touch base on something that you may not be familiar with. So some of you who have traded the futures market would be somewhat familiar with this. Those of you who have not would likely not understand where I'm coming from. So the purpose of this video is, of course, for educational reasons. I want you to see the big picture. I'm going to show you specifically crude oil because that's what I personally trade, but I'm going to want you to look at the broader picture whenever you're looking at either commodities or futures for that matter. So, guys, if you like these videos, if you enjoy them, please below the video, like it, share it, subscribe to the YouTube channel. I appreciate any and all feedback that you could give me. Again, if there's topics you want to discuss, please feel free to leave them in the comments or shoot me an email, info@specialanalysis.com, and I will be happy to cover them. So I'm going to pop open the chart here, and we're going to notice that we're basically looking at the same thing, but we're looking at it side by side. To the left side and to the right side, we're looking at two separate things. And while it's still crude oil futures, this side of the screen where my cursor is the current contract that we're trading. And this side of the screen is what we call volume rollover chart, meaning this is continuous. So you notice that the analysis drawn on this screen is slightly different than the analysis drawn on this screen. And the reason for that is fairly simple. They're different because there's more and different data that is put into them. So when you're trading a future or a commodity or something of that sort where there are specific contracts and then there's volume rollover charts, I encourage you to put them side by side for this very reason. You can see we had clear and defined resistance as price peaked its way up here as we made the high at that 130 area just about a week ago. But you could see on this chart there was no way to have known that. Why? Because there's less data. This chart is specific to this particular front contract, which only has a limited lifetime. But if we look at the continuous following or volume, what we call volume rollover chart, you could see that we were able to build a much more intense and much longer term analysis simply because the data was there to do so. So when you build these analysis, when you draw these lines, when you build your channels, when you determine where these areas of support and resistance are, you're really working off of past price action. So if you can generate the roadmap that the market offers you, you can then in turn know where price is likely to stall, reverse, or accelerate from in the future. And that's exactly what we get. You can see price broke this channel here and it went to the next resistance channel. It broke it again, it went higher. It broke it again, it went higher. It broke it, it went lower. It broke it, it went lower. I mean, you could just see that when you identify these areas accurately, you can read the price action. And if you have a trade plan that you can build around them, and if you have the ability to implement a conservative approach, you could be wildly successful and wildly profitable. And it's not just on crude oil, it's on gold, it's on the NASDAQ, it's on Apple, Google, a small cap, Bitcoin. It doesn't matter what it is. It's all the same. The analysis approach is exactly the same. But you could just see, between the past couple days, you could see that we had support, support, support. We didn't have it in this chart because we were looking at a larger amount of data. But in this chart, we had a less amount of data and we could see that the price found support. So we need to be aware of this. We need to be aware of the differences because if we get a buy signal on one chart, we're going to need to look at the other chart and go, do we have enough reward to take the risk that is going to be associated with taking that trade? So that was my point for today, my little educational spiel. So those of you who are trading any type of futures, there is a continuous rollover chart, and then there's a contract-specific chart, and I highly encourage that you put them side by side so that you can have a complete read on the entire market before making any decisions for yourself. So, guys, again, I appreciate your time. I thank you very much for watching these videos. If you like them, enjoy them, below, simply like, click, share, subscribe to the YouTube channel. I appreciate all of that. And with that, I wish you a beautiful and blessed day. Have a great weekend, and I will talk to you early next week.